Hey guys, welcome back to the channel. Today we're going to be talking about identifying a bullish trend, looking for an entry, looking for an exit. We're going to talk about Bitcoin, why its trend is so bullish, why it might be a good idea to keep holding. So let's go take a look at the Bitcoin chart. Here we go. This is BitMEX. And the first thing we want to look at is how to identify a bullish trend. So we're going to take our line tool. This is on TradingView. We're going to take the line tool and we're going to draw between the lowest points of each trend, or sorry, the lowest points of each price action segment. So it might be a little bit difficult when you're starting out to decide where that might be. But basically you want to draw a line from the bottoms as best you can. And if you notice that it hits and then maybe it hits again or the price starts to move away, that would be a good place to put the line. Mostly it's just for reference though, so you can see that. So as we go up, the trend keeps getting faster and faster and faster, and this is what we call a parabolic advance. So it's moving away from the trend and it establishes a new trend, and it moves away from that and establishes a new trend and keeps going. So we're going to talk about so this is just one kind of trend actually. Another thing we want to look at is, if you want to identify a trend, is you can check the RSI on a longer time period. So if we're looking at the RSI, I've got my RSI settings here. We have one set to 200 and one set to 25. This is on the 2 hour. Usually I have these settings on the 1 hour candles, but this is just fine on the 2 hour as well. So here on the 2 hour, we can actually see pretty nicely that above 50, which, so these indicators, the RSI indicators or relative strength index is, and you guys can find that by clicking on the indicators tab up here and typing in relative strength index and click on that, and it'll put it down here automatically for you. You do not have to be a pro, you do not have to have a pro subscription to do that. But once you have them down here, you can click on this gearbox and change the length settings if you like. These are just the settings that I have them set to right now. It's not a huge deal what you have them set to exactly. But for this 200 one, it actually lines up pretty well that we have it set to 200, because we can see at the 50, which is the center between 0 and 100 that it oscillates between, that it is sustained above 50. The relative strength index is strong or neutral at the worst of times. So that's really good at indicating a bullish trend, because then you can come and look and say whenever so I have a smaller RSI indicator down here of 25. You can see that if the longer term RSI values are sustained above 50, especially after it bounces off of 50, and it starts to get sustained, then you can look for these dips in the shorter term RSI, and that might be a good opportunity to go long, because it'll show a short term retrace in price, but long term the trend is still bullish. So now that we've identified a trend and we've talked about how to find a good opportunity to get into a trend, so let me reiterate there. If the longer term RSI is sustained at high levels and the lower term RSI, the shorter RSI, is dipping, that would be a good opportunity to buy. Most times. That's the strategy that I use for my bot actually. These aren't the exact settings I use for my bot, and there are a few more things that it takes into account, but that is the basic strategy actually. And let's move on. So we're going to talk about, now that we've identified a trend and we have identified when might be a good entry to go long, we're going to talk about when a good exit would be and why right now it is not necessarily a great time to exit. So a lot of people will see these trends moving very quickly, and they'll see it going up and they'll be like, okay, it's going up, it's got to retrace, it's going to go back down, and I don't want to be holding it when it goes back down. They'll leave with their 5%, 10% gains, which is fine, but they're going to miss out on the huge trend that follows. And right now we're looking at almost 200% from the bottom it is 205 to the top here. It's 205%. Wow. Since December. Now, if we were doing a trend following strategy, we wouldn't actually think about getting in until we see this sustained increase in price here. Right here, we see a higher low getting made, but that isn't necessarily a bull trend. Until we see the price steadily increasing, that is a good indicator that we might be starting a new trend. And so maybe if we were to get in right around here and then go all the way up, that's 140% already. That would be incredible. So when we're thinking about getting out, there are two things we want to look for. One is a strong movement away from the latest trend that we've set. So at this point, the trend we'd be looking at is this trend here. And as it moves away from that trend, we might be thinking, and it starts to go sideways at the top. Another thing we can look at actually here is, this is a bad example, but if the price shoots up straight on Bitcoin, it tends to move up after that. So if it has one really sharp spike, it tends to move up after that. If it's a steady increase, there will be a good indicator that it is time to get out of the trade when you can draw these shorter trends on the shorter time frames, and then you see it break below that trend. So it shoots up away from the macro trend, goes sideways, breaks the smaller trend, and I think a lot of other automated systems or bots were seeing the same thing, and that's what triggered the sell-off, at least initially. This ended up turning into a liquidation event. So a lot of people who had stops down here or liquidations got those trades executed, and then it automatically pushed the price way down, which would have been an excellent opportunity to buy in if you were lucky enough to have an order set down there. But it was only down there for a few minutes, so it was not easy. Anyway, so you see it pulling away, goes sideways, breaks the shorter trend. That's a good indicator to think about getting out. Drops back down. When you see this sharp drop down and it still hasn't broken the trend that you're using, the longer term trend that you're using, that is a good indicator that it's probably not going to keep going down. This might be a more difficult time to decide to get back in because it still hasn't returned to the longer trend yet. So, I mean, we wouldn't even know this trend exists yet, so we'd be looking at this one and we'd see it right here, still very far away from the trend line. Maybe it would be a difficult spot to decide to enter using the trend lines. But if we go and look at the RSI, it's very sustained. It's almost at 54 here. It's dipped pretty hard on both of the RSIs, and now it's starting to rebound. So that might be an idea to get back in. Not necessarily saying that is how it would have happened, but we're going to go take a look at our trends again. The other idea that you want, or the other thing you want to look for when you're thinking about getting out of these trades, so the goal is to catch as much of the trend as possible. And the reason that these bullish trends are such a great way to trade, if you have an opportunity like this, these trends are amazing to trade, is because you can you can enter trades along these, either the shorter term, so even if we had like a shorter term trend here, we could say as it gets closer to the trend, you see it goes up and down and doesn't really go sideways much. If it does this once before, like if it goes up and comes back really sharply once, that might be an okay time to get in. Just because I've looked at a lot of these scenarios. Usually if it comes back once, that's a good opportunity to get in, but if it goes up again and starts to go sideways, you're not looking for another entry until you get a really nice solid dip. But anyways, as it's above the macro trend, so the longer trend that you have set, there's no really big reason why you would want to sell and not get back in. If it gets really far away from the macro trend and starts to go sideways, that would be a good idea to sell and then wait for an opportunity to buy back in closer to the trend line, just because the price could, like in this case here, could return to the trend line very sharply. But as it slowly, if it goes sideways into the trend and starts to pull away again, that is a perfect time to think about getting in. And now we see it pulling away again, and we could draw a shorter trend yet again from this point. And so we're starting to see a pull away from the shorter trend. This is a pretty spectacular looking entry because it's almost at the highs here, and it's not super volatile. It hasn't spiked up really hard. It's just going steady along the trend here that we've set for it. Now, a reason why we might want to get out is if it drops below this trend. So this is why these trends are so nice, is you can keep moving up your stop, so that way in the case that does go down, you can lose as little as possible by trading the latest stop. So maybe here or here you would have your stop set, and if it breaks through this trend and then breaks through one of these lines, you would want to exit and wait for a good opportunity to get back in, just because if it does break through there, you're not sure when it's going to stop going down. So those are so in my opinion, as we're looking at this, so we see it following the trend. I'm hoping that it keeps doing this, and when it breaks through 10K, if it breaks through 10K, when it breaks through 10K, it should see a pretty big reaction, just because 10K is a very strong psychological number. So for us, maybe that won't mean anything because we try to numb ourselves to those things. But when the normies, so everyday people, start to hear, oh, Bitcoin's over 10K again, that's going to be a big trigger for average people to start getting back in again. So I'm really hoping that happens, and then we could see another parabolic move up. One thing to look for that I haven't talked about yet is if you draw a line between the tops of previous moves up, so previous waves, and then you see a final wave. This can be a good indicator that it's also time to get out. When you see either A, it comes up and it hits this, the bottom of this trend and comes back down, or in some cases it will come over and do one of these. I really like trading those, but because of how far away it is from that trend right now, I don't think that's going to happen. I think it would be much more likely that it hits the bottom of that and then comes back down. So that's what I'm hoping happens. I guess we'll see. But as for right now, it's just extremely bullish. There's no real reason to think about getting out or being afraid. So I hope that the trend is generous to you guys and you have some good trades. If you like the video, please like, subscribe, and leave a comment below. You can hit me up on Twitter if you like. Just again, I hope you enjoyed the video. Have a good one, guys. Happy trading.